So central banks have been accumulating gold recently at levels not seen since the 1970s. What about your average retail investor out there in terms of protecting themselves and protecting their wealth? Why is it important for them to hold silver and or gold, physical gold, within their possession in 2023? And maybe you could give us a bit of a contrast there on those two assets, silver and gold, what role they play for your average person out there on the street.
Well, first of all, the easy answer to why you need to hold it, or why you should hold it, is that it removes counterparty risk. And one of the truisms about gold and silver that Doug Casey made popular a long time ago is that gold and silver are assets that are not simultaneously someone else's liability. I completely and totally agree with that. In a perfect world, we would hold it all ourselves. Some people don't have that luxury, and there are storage options that make sense. In a perfect world, however, I would always hold it myself. And if that is all possible, the removal of counterparty risk to me is such that you have a far greater chance of being ripped off by the system than you do by a would-be burglar. As far as gold and silver are concerned, to me, gold is wealth. It has been wealth and silver too, but both have been wealth for 5,000 years. They've outlived hyperinflation of Germany, 2 world wars, the Great Depression, and every pandemic, and still represent pure wealth. But to me, silver is probably the most undervalued asset on the planet. And we look at that from not only its geologic relationship going back 5,000 years, but also its price relationship with gold. And it is an asset that is woefully underowned, woefully undervalued, and has a massive expansion in industrial applications. And over the past 3 years has taken on a renaissance, if you will, in monetary demand. What really is striking to me is silver is stuck at around $24 an ounce, yet what we have seen over the past few years is the biggest drawdown of physical supply the world has ever seen from the exchanges. So in other words, with leverage and rhetoric, the big banks, the bullion banks, are able to suppress the price of silver, yet a country like India purchased 304 million ounces of silver last year, took possession of 300 million ounces. There's only 33 million ounces in the registered category on COMEX. That's 10 times what is backing the price-setting mechanism of the West. If you took the entire ecosystem of COMEX, all their vaults, there's less than 300 million ounces in those vaults. Of all of that silver, call it 290 million, only 33 million are bars that are available for delivery backing the contracts. So the term rehypothecation comes into play, where there are more contracts than there are bars backing it. If you look at what the London Metals Exchange just said, that if they see demand anywhere near what it was in 2022 and deliveries associated with that demand off the exchanges, there won't be any silver left in 2023. So what we are witnessing, in my opinion, is the value of a generation. However, when the music stops, if it were my choice, I would own gold, because the biggest money in the world, the central banks, the hedge funds, the sovereign wealth funds, the commercial banks, they're all accumulating gold, and I believe it will be the backing of a new system. I think there will come a time when we trade our silver into gold, because gold is the money of the banks and the money of the kings. And if the worst thing that happened is you own a bunch of silver, you'll be okay. But just to give people an understanding of what I really mean, in 2010, I woke up to see an 85-to-1 ratio, silver to gold. And I did a little research at that time, and geez, this is the second time in human history it's ever been this high. So I told everyone on YouTube, I started doing YouTube videos, sell your silver or your gold right now, I'll sell it to the marketplace and buy silver with it. And anyone who would have done that, in theory, would have got 85 pieces of silver for every 1 ounce of gold. Within 7 months, in mid-2011, we saw a regression to the mean, to its average, of 37-to-1, with $50 silver and $1,915 gold. 37-to-1, 7 months later. So anyone who would have traded 1 ounce of gold for 85 pieces of silver could have traded 37 back for 1 ounce of gold, making almost 2.5 times what they started with. And I think when you talk mathematics and statistics, the further away you get from historical averages, the greater the magneticism that regresses or returns you to the mean. Silver represents the opportunity of a generation. However, when the music stops, I truly do believe the place to be is gold, because it will back the next system. I think the next system that arises from this fiat system will have to be pegged to something. They'll have to have a governor. And if it's not, then no one will ever drink that Kool-Aid again. And that'll be gold. And that's why people like Jim Sinclair and Jim Rickards have said gold will go to $10,000. It'll be pegged to a new reserve standard and will never come back down. So look, I could have $1 million worth of gold in a small briefcase and sprint out of this hotel to my hotel. I think it's gold is the place to be, but silver is the vehicle that gets you to that point.
I want to ask about Fed policy in relation to precious metals. How does what the Fed does, whether it's just job owning or whether it's actual actions that they take, how much does that affect the precious metals market, and what should investors be looking out for when it comes to what the Fed is doing in precious metals?
There is a term in economics called Gibson's paradox, which speaks of the inverse relationship between real interest rates and the price of gold. The Fed has done a pathetic job of tackling inflation. They want us to believe they're getting tough on inflation, but what they're doing instead is massaging the way that they gauge inflation. They just did it again here. They changed the metrics here just recently on how they gauge inflation. John Williams of shadowstats.com, who only gauges inflation the way that it was measured prior to all of these changes in 1980, will tell you that inflation right now is 15%. But even if we believe the nonsense that inflation is at 7%, so we had room service when we were skiing up in Whistler the other day, and it was $125 for 2 Eggs Benedicts. And so there's inflation, right? But they're telling us there's not. But I will simply say this to you. You know, Fed Chairman Powell says his hero was Paul Volcker. Paul Volcker was the last politician to ever, pardon my French, have balls to do something enough that it would not be very popular nowadays. And what was that? He raised interest rates to 20%. You raise interest rates right now above real inflation. So you raise interest rates to 15, 16, 17%. That would stop inflation in its tracks. It would also blow up this economy in ways that no one can even imagine. They won't do that. They won't get tough on it. In fact, the smart money, the smartest traders on the planet, that being the bond traders, are telling you it's just a matter of a few months before they pivot, as we keep hearing, reverse course, and go back to QE instead of QT. In theory, if this was real and they really were to raise rates high enough to combat inflation, raise the reserve requirements in the banks, which currently are 0, then it would have a negative impact on gold. But this time, I think what it is also, what the Fed is dealing with, what we are dealing with, is not just rates rising in a bubble. I think we are dealing with the end of the petrodollar. And as the dollar collapses and rates rise, you're not going to feel safe inside of government treasuries as the dollar is collapsing and being forsaken and dumped. So there are real risks this time. It's a much more complex stew of mishmash, but in this case, I would say what they're going to do is nothing but kind of a sideshow, if you will. And I think the rest of the world will choose gold over the safety of the US dollar. And that's really it, in that I've always looked at gold as the safe haven. The world for the past 50 years has looked at the dollar as a safe haven. You have rising rates and a crashing dollar, that's not the same thing as rising rates and a dollar that's not collapsing and being forsaken as a global reserve currency. So this one's a little bit more complicated, but I would simply say this. The Fed won't raise rates enough to make a damn difference in the price of gold, and the world and the markets choosing where interest rates should be will have a greater effect, especially as the dollar starts to cascade down. And that, to me, is the biggest reason to own precious metals right now as wealth in a period of time where what we consider to be wealth is going to be